How are you all? Hope everyone is having a great day. There was just the start of the first XRP spot ETF, but if you watch my video explaining it, you'll see that it came from a very small issuer. Well, a huge number of XRP ETFs from some of the biggest companies in the world will be coming out between now and tomorrow. When these ETFs come out, I think the price of XRP will do certain things that will help us get out of the current downturn. We will talk about those things in this video. Finally, at the end of the film, we'll talk about some new information about Evernorth. Just a few days ago, the first spot XRP ETF came out on the market. Not only did this spot ETF do well, it did better than every other ETF that came out this year. Over 900 ETFs were released in just about every possible area. However, this spot XRP ETF that just went live did better than all of them in the important ways. An important fact that almost no one talks about is that this ETF wasn't made by BlackRock, Fidelity, or Franklin Templeton. Instead, it was made by a small company with a tiny brand, a tiny distribution network, and a tiny amount of assets under management. Still, they blew the doors off of the ETF market for the whole year. And when something so small does so well, it means there is more desire than anyone thought. It tells you that the market needs XRP items that are good enough for institutions. It also lets you know that the numbers will look very different when the real giants come in. Things are about to pick up speed here because tomorrow the giants will walk onto the stage and they won't be coming in quietly. You can find a link to the XRP Millionaire Blueprint in the now pinned comment below. It will show you exactly how the top 1% are positioning themselves right now, what they think, and how they build life-changing millionaire wealth during asymmetric opportunities like XRP. Tomorrow, Franklin Templeton will enter the market with their XRP ETF, and a lot of people are looking forward to it. They expect $500 million in trading on the first day. That's not retail noise or hype. That's what happens when a company that manages trillions of dollars lets in a new type of asset. The last issuer we saw go live had only about 10,000 fans on X and a tiny fraction of Franklin's AUM, but they still broke records. Think about what happens when a bank worth trillions of dollars tells their clients, their RIAs, their wealth networks, and their marketing partners, we now offer an XRP product. People who talk about wealth use a different language, and that language is scale. They move slowly, but they don't stop once they start. Franklin Templeton is just the start. The next ones are Bitwise on November 20th, 21 shares on November 24th, CoinShares on November 22nd, Grayscale on November 26th, and WisdomTree on November 25th. This group of lenders doesn't mess around. They're the best. These companies have a huge impact on trillions of dollars. They control the flow of ETFs around the world, and institutions believe them a lot. These institutions have been waiting for green lights, clarity, and regulated access points. We already saw what happened in the Bitcoin spot ETF market, so this is where things get interesting. There were a dozen new ETFs, but the real wave didn't start until the big boys got involved. The biggest and most well-known issuers were the first to plant their flag. This was the start of the inflows, the headlines, the CNBC segments, the wirehouse distribution, the pension conversations, and the family office contact. In fact, XRP is beginning that phase right now. The time couldn't be better too, since the crypto market as a whole has been in a cycle of letting go of stress. Most investments have been selling off as things have cooled down, but during the same time frame, XRP has been quietly doing better than the bottom. XRP is currently staying at the exact amount it needs to stay at. The market as a whole has been going down, but XRP hasn't broken down. At the same time that Franklin Templeton is about to start their ETF, XRP is sitting right on its key support level. This is not an accident. Markets don't just happen. You can see this more clearly as you learn more about cycles and how momentum builds around triggers. Simple is what we want to see here. We want XRP to rise above this support at the bottom and move back up toward the middle of the current trade range. Just that one move could change people's minds and send traders and buyers the signal they've been waiting for. A clear reversal structure is building at the ideal time, along with the most important catalyst for institutions that XRP has ever seen. What's even more interesting is that almost no one talks about what you can see if you zoom out and look at the XRP to Bitcoin chart. This is the measure that shows whether XRP is doing better or worse than Bitcoin. It already hit bottom on that chart. It turned around already. It has already begun to rise. That's the first sign. That is the quiet rotation that happens before the news stories, the inputs, and the story becomes clear. But for that rotation to keep going, the market needs a signal that tells buyers they need to act now. That's what the ETFs do. The fact that the whole lineup came out at the same time is exactly the kind of attention XRP has been looking for. For years, XRP hasn't had a real institutional driver. Real, controlled access at the infrastructure level that brings in new dollars that would never have touched crypto before. That's what changes the way supply works. That's what causes new calculations of liquidity. That's what can change a whole trend. Plus, here's an important point of view that most people don't think about enough. Not because the makers think it might work, but because they want to do it. They're starting because they can see a lot of sales coming in. They've talked to people who handle money. These people have talked to clients from institutions. They've seen the demand coming in. Companies don't allow ETFs unless they know there is a market for them. These businesses don't take chances with their name. They don't guess. They act on cues from the market. The signal is clear right now. A lot of people in traditional banking want to invest in XRP. It's an easy question. How fast and how much goes in? We should get more than $250 million when Franklin Templeton goes live. That's what I think. Is it possible for more? Of course. Even though it came from a small company, the first ETF did very well, much better than anyone had expected. You can picture how fast things will move if Franklin, Bitwise, 21 Shares, CoinShares, Grayscale, and WisdomTree all start the market moving in the same week. At Evernorth, the talk changes from ETF flows and price action to the more complex design that institutions are planning to build on top of XRP. The more information that comes out, the clearer it is that Evernorth is not just another crypto company trying something new. There is no money coming in. The item isn't useful in any way that could help the business make money. You're basically sitting on top of something that's going up in value and hope that it goes up faster than the interest rate on the loan you took out. It doesn't pass the institutional test for a lot of firms because they want return models, not just risk. Right here is where Evernorth changes the land. They don't just say, we're buying XRP. They are creating a full institutional treasury model that runs on XRP. This has the added benefit of letting them move money between DeFi rails on the XRP ledger. That means money comes in and out. That means to give way. That means how productive the goods are. It also means that the treasury system isn't just waiting for the value of the dollar to rise. It's paying off, getting bigger. It's getting worse. It does this in a way that conventional economics can understand. When it comes to things that institutions care about, the XRP system has always done very well. Fixed fees, guaranteed execution, quick settlement, design that is easy to comply with, and a history of over a decade of no problems or outages. When you add that to a DeFi environment that is growing and being built with professional-grade dependability, you start to see a model that looks a lot better than Bitcoin-only treasuries. You can now hold an asset with high liquidity, use it in schemes that pay a yield, use DeFi rails with low costs, and maybe even use new services for institutions that are being built around the XRPL. In the real world, this is the kind of model that CFOs and treasurers use. Every company's treasury wants to get money back from its extra funds. They use liquidity tactics to make money, not to gamble. For example, they buy short-term treasuries and lend money in repo markets, but because that's how good handling of a balance sheet looks. Evernorth is basically giving institutions a version of that same playbook that works with blockchain and is driven by XRP. And that story can be told all over the world. The time is even more interesting, though. When spot XRP ETFs come out, they bring in a lot of institutional capital. The second wave, though, comes from treasury tactics like Evernorth won. The structural capital, long-term capital, and sticky capital that makes XRP part of business processes instead of just portfolios. Treasuries give you stability, while ETFs help you find new prices. When these two forces come together, they make something that crypto hasn't seen much of before, besides Bitcoin. Another important reason for Evernorth is that institutions want tools that are made just for them, not retail systems that have been repackaged. In the last few years, people in the blockchain world have been after NFTs, meme coins, and high-risk yield projects that go away as quickly as they come up. Institutional capital doesn't touch that world. They want models that are easy to understand, returns that they can count on, careful risk guidelines, a lot of cash on hand, and clear laws. A lot of people say that XRP is where the institutions will go after they're done trying because the XRPL has always been built with those goals in mind. The first real example of that idea coming true is Evernorth. It makes XRP more than just an asset. It makes it infrastructure and a backbone for business DeFi. That means that every step forward that Evernorth takes helps more than just its own business. It makes the whole environment better. More money, more developers, more financial goods, more conversations between institutions, more integrations, and more speed. In the real world, network effects happen like this, not because of fads, but because serious companies build serious tools for serious money. And when institutions start using DeFi yield tactics on XRP, it opens up a whole new type of demand. XRP is no longer just used for settlement or kept as an investment. It is now an object that can be used to make money. And when an object starts making money, it's more appealing to keep for a long time. This is the same reason why banks are appealing in the old way of managing money. They bring in yield. Now think about how that idea could be used for XRP-based funds in a world where institutions are looking for digital strategies that are faster and more efficient than legacy rails. There are other things going on too, though. Every other financial service will start to pile on top of DeFi once it is officially approved by the XRPL. structured products, on-chain payment processes, FX integrations, off-chain credit linkages, tokenized assets, and new types of risk-managed yield instruments are some of the things that are available. At the heart of all of this is XRP, which is fast to settle, has a wide range of liquidity, is cheap, and is easy to understand from a regulatory point of view. Another huge benefit is how people see the brand. Reliability is important to traditional banking. They want partners who build in a good way. They don't want economies that work like casino ones, but ones that make fintech work. Ripple has worked on that image for more than 10 years. Now that Evernorth is following a similar institutional-first strategy, XRP's whole value argument gets stronger. It makes a loop that keeps going. Serious products get serious money, which leads to even more serious goods. This is what a lot of buyers miss. In crypto, the loudest speakers talk about price swings, hype cycles, and the newest token story. Long-term value, on the other hand, comes from infrastructure that institutions can use to stay in place. That's always where XRP has been sitting. And Evernorth is about to make that position even stronger by giving institutions a clear, professional, and yield-driven reason to keep and use XRP. You can see how well the time is synced when you zoom back out to look at the ETF launches going on right now. ETFs give you exposure and cash flow. Treasury answers are useful and last a long time. Together, they lay the groundwork for steady amounts of capital that don't stop when the hype dies down. They make real demand, not demand based on speculation. They lead to real economic action, not just short-term trading. That's how an item goes from being interesting to being necessary. Because of this, the next few weeks will likely be some of the most important in XRP's history. As more ETFs come out and Evernorth shows off new parts of its treasury design, the ecosystem moves from being potential to being active. Things are going live. Big pipes are starting to open up. Institutional paths are being made. And XRP is now doing what it was designed to do from the start. Seeing what happens when these stories meet up right on the price charts makes this even more interesting, because the structure of the XRP chart has been building a clear, tight coil that is just waiting for this kind of catalyst. And things can get really exciting when basic things like this meet clean technical sets like these. Everything starts to speed up at this point. The market starts to reevaluate prices, and this is where trend changes often happen quickly. This is not advice about money. As the next few days go on, more ETFs will be released. One of the most important things to watch will be how these new funds affect the XRP price structure in real time. That's because XRP has been trading in a narrow band that has behaved like a coil spring for months. It has been taking in sell pressure while holding key structural levels. This has been building a base that can flip quickly when a trigger shows up. That's why the time of the ETF is so important. The stock market doesn't just move because of news. It moves because the conditions are right for a spark. There has been a sign on XRP's chart for weeks that this kind of spark is about to happen. If you look at the current range, you can see that XRP has been very close to its bottom support. Because that doesn't mean you're weak. It means you're taking it all in. People are trying to get rid of their stuff, but buyers are coming in at the same price and won't let the price drop. In technical analysis, that kind of behavior generally comes before being sure of the direction. What if buyers had full power? XRP would have broken through that support weeks ago. It held instead. It got stable. It's squished. Now that one ETF after another is coming out, that pressure is lining up with an underlying driver strong enough to flip the whole range. The middle point of the trading area is the next big goal on the picture. Basically the line that splits, not moving and moving forward. The market has been looking for a sign that the downtrend is over and the accumulation phase is changing. Once XRP breaks through that level, liquidity is likely to speed up. You can think of a move to the middle as more than just a price event. Here, cash that has been put aside starts to come back. Traders get interested again there. It's where formulas cause reversals to happen. And XRP doesn't move slowly when it breaks through these kinds of turning zones in the past. People who are short on cash tend to move quickly after confirmation because liquidity groups are found above resistance and not below it. But the most important thing to know is that a professional turnaround is only as strong as the fundamentals that back it up. So that's why this moment stands out so much. The ETF plan is all stacked on top of each other in 1 week. It's not by chance, it's not spread out. It's the arrival of several big issuers at the same time, all of which are bringing attention, money, and legitimacy. The first ETF already broke all kinds of records for a small company. Now picture days of news from all the issuers in the world. The financial media is buzzing about Franklin Templeton, Bitwise, 21 Shares, CoinShares, Grayscale, and Wisdom Tree. There's more to this than just crypto Twitter. It shows up on Bloomberg terminals. It gets on CNBC. Wealth advisors are hit by it. It gets to the study desks of institutions. The feedback process starts when that happens. New knowledge brings in more money. Inflows make things work better. Coverage comes from performance. Coverage gets people's attention faster. The cycle keeps going. Overhead gains caused by ETFs have always worked this way, even outside of crypto. It had gold on it. We saw it happen with certain ETFs for sectors. It happened with Bitcoin too, just this year. When the waves begin to build up, they don't stop quickly. This is not a day trade flow. They're flows in structures. They come from retirement plans, wealth networks, managed investments, and people who distribute multi-billion-dollar assets and don't sell out the next morning because a candle moved. For years, XRP has been missing these kinds of buyers. Now, the channels that will bring them in are finally being laid out in plain sight. That's the main difference. When sales go up, jumps happen. Trends are made by the flow of institutions. XRP is near the bottom of its range, and institutional pipelines are about to open at the same time. This is one of the most unequal situations we've seen in this environment in a long time. What's going on in the crypto market as a whole is another important issue. Bitcoin's popularity has been hovering around levels that have never been seen before, but markets don't stay in those areas long. There is always rotation. It's always going to happen. When dominance is at its highest point, capital starts to move into assets that are more valuable and have stronger upcoming triggers. XRP is one of the few investments that is both undervalued and about to be accessed by institutions. That's why the change in the XRP to Bitcoin number is so important. There has to be a reason for it to go backwards. Not long ago, that chart printed its bottom structure and started moving up, even though Bitcoin was still settling near its highs. It's not a coincidence. It's putting money away early based on what the market is about to get. If you put these signs together, ETF inflows, ratio reversal, compressed price structure, institutional narratives, and the Evernorth catalyst, they all add up to make capital start to treat XRP differently. Not as an asset that sits around waiting for court reports, not as an investment tool waiting for the next big thing, but as an asset that institutions can easily reach with clear incoming demand, usefulness, and infrastructure that is getting better. There is a point in every loop when the story changes. For Bitcoin, it was the stock market. For Ethereum, it was the EIP 1559 burn and institutional staking. For XRP, it's the start of ETFs and the growth of institutional DeFi infrastructure at the same time. And the market is just now starting to reflect that. Visibility is another thing that will be very important. After a week, when billions of dollars worth of ETFs come out on the market, experts start to change their models. Notes are written by research desks. People start to ask advisors questions. Institutions that didn't pay attention to XRP before start to see it in their daily news. It's important to pay attention because that's the first step in allocating cash. It doesn't get any money flowing into it. Institutions don't pay attention. These ETFs make sure that people won't forget about XRP. What will happen after this week is also very interesting because once the ETFs are launched, money starts coming in and things calm down, the next group of companies will step forward. As of now, neither BlackRock nor Fidelity has filed, but ETF starts are up against each other. No provider wants to be late to a category that's bringing in a lot of money quickly. Strong numbers from Franklin Templeton, Bitwise, CoinShares, and WisdomTree put pressure on the big companies that haven't changed yet. This is what happened with ETFs for Bitcoin. As soon as early adopters showed that there was a need, the rest of the business rushed to join. It looks like XRP will do the same thing. And since Evernorth is getting ready to launch a full bank model based on XRP, institutions will not only be able to buy exposure, they'll also be able to use that exposure in useful ways. In order for acceptance to become integration, that last piece is missing. Once that happens, institutions will never be the same when it comes to XRP again. It turns into a part of their money-making machine, not just something they do for fun. At that point, long-term paths start to take shape. All of these things are happening at the same time to move XRP into a new part of its life cycle. ETFs are starting up, capital pipelines are opening up, chart structure is getting tighter, rotation signals are appearing, and new institutional-grade utilities are appearing. During this phase, people move instead of waiting, take part instead of watching, and let their real flows happen instead of waiting for permission. Now, it all depends on how fast these changes happen once the ETFs go live and the first wave of numbers starts to come out. The XRP has been sleeping for a long time, but sleeping is not the same as dying. It's just getting smaller. And compression always ends when a strong enough trigger shows up to break the structure.